When making financial decisions for the future, many people look to the past, but basing your investments off former trends may not be the best strategy. Joining us now to talk about rear view mirror investors is Peter Sashecki from Everything Financial. Good morning, Peter. Good to see you.
Nice to see you, Carrie. Good morning.
So who are rear view mirror investors?
Well, they're the second guessers. They're the ones whose crystal ball seems to work better than some other people. And they look at the past, they look at past rates in certain portfolios or mutual funds or whatever the case may be. And they go, well, why didn't you put me in that? Why aren't I in that investment? Well, that's in the past, and past rates of return are not for sale. You can't base a plan, the key thing, having a plan in the first place, on what something did yesterday, last week, last month, or last year.
So if we can't look to the past, I mean, we're sort of, again, looking to the future and trying to guess, basically, about what might be working.
Well, yes, but you use portfolio managers whose guessing, if you want to use that term, is generally right a lot more than it's wrong, because there's a plan, there's a system they use. They're what's called active managers, where they're looking at what things are going on. And really, to make you a good amount of money, they really only have to be right about 60% of the time, Carrie, and that's not bad if they're right 60% of the time. And one of the key things they don't do, and people should never do, and this is what rear view mirror investors do, is they try and time the market, and market timing just does not work.
How much money can this cost you in the short term or the long run?
Well, I'll give you an exact example. I know of a gentleman who tried to time the market when back in 2020, COVID hit. Markets dropped from February to March, a significant amount of money. And I heard about an individual, and I ended up talking to him, who jumped out of the market at the bottom, where all his friends who stayed in are now up from then to now. And last year, 14 to 20%, he's up 2%. He missed the whole ride in recovery by trying to time the market. Now, that's a short-term example. The long-term examples, say over 20 years, are even more staggering.
Oh, my goodness. It's got to hurt for that poor investor. There's something called superficial loss, or the superficial loss rule. What is that?
Yeah. Well, this is what the market timers, the rear view mirror investors think they can do, which is, the market's up. Sell my mutual fund or sell my portfolio. And then when the market, drops tomorrow, because it's going to happen tomorrow, because I heard it on the internet, buy me back in. Well, you can't. The superficial loss rule is there, which means you can't buy back into the same investment within 30 days. So if you think you're going to time the market and you're sitting on the sidelines, that could be very costly. You miss the ride. You never want to sit on the sidelines. It can cost you a fortune just by missing a couple days of the best days. It can cost you almost half a portfolio.
That's interesting. So what is your suggestion for people who really want to be able to be forward thinking when it comes to their portfolio?
The portfolio is just one part of the financial plan. It is not the financial plan. It's a product or a strategy within the plan. Find yourself what's called an active portfolio manager who is a fiduciary, whose job it is to work for you, not for the financial advisor or the registered financial planner. They're there for you, the consumer, to build the right plan. And generally what they do is they design a plan or a portfolio to actually fit your financial plan, so the two work together with tax efficiency and, as I said, active management. So they're looking for what's the latest and greatest next big deal or next big item that they feel will go up. And again, they only have to be right about 60% of the time to do a good job for you.
Stop looking in that rearview mirror. Just look forward at the road ahead. Peter Sashecki from Everything Financial. Thanks for joining us today.
Thanks, Carrie. Have a great day.